Kuphi na kuphi emakhaya amadolobheni aseLukomplus khona. Sawubona ke mbukeli, and a warm welcome to this week's edition of Yilungelo Lakho. It's your right. Mina ke ngimSimphiwe Ngcongwane. And today we'll be zooming into pension matters, looking at what changes have been brought to your pension system by the newly introduced two-pot withdrawal scheme. Singamosheke isikhathi asesive ukuthi yini leseyishintshile kulolu hlelo lwempenshele yakho solokuqala ke lolu hla lwe-two-pot system. Did you know that the two-pot pension system has brought about significant changes to your pension money? Now members can collect increased lump sums at retirement, but there's a price to be paid. Ingabe kusho logo. Well, our guests are here to enlighten us. Sasimukele ke Mary Nkotsie na Isaac Letlape. Bobabili ke babuya e-Government Employees Pension Fund. Gentlemen, a very good afternoon to you. Thanks for joining us. Welcome.
Good afternoon.
Good afternoon.
Good to have you on the show today. Dr. Isaac, we've seen after the signing of the Pension Fund Amendment Bill into law, let's talk about what these rules are and what they entail.
All right. Thank you, Simpiwe. The Pension Fund Amendment Bill was signed into law, and what that meant for the GEPF is that we were required to make rule amendments, and this is to enable our members to make withdrawals and also to align with the two-pot system legislation.
Okay.
What that means in simple terms is that we needed to incorporate definitions that were not in our rules previously. An example would be a seeding capital. The two-pot system introduced early access to retirement savings. Our rules did not have provision for early access. It then means we needed to amend our rules so that we can allow our members to apply for a withdrawal without necessarily exiting the fund or resigning from the
Maybe let's talk about the amended rules.
Yes.
You know, those amended rules that will apply to the two-pot system and how the new rules, so to speak, will affect our consumers.
All right. I'll start by explaining as to how the two-pot system would work and also explain as to what changes are in our rules.
Yeah.
The two-pot system says that going forward from the 1st of September, contributions collected by the GEPF would be divided or allocated to two pots. First pot being the savings pot, the second pot being the retirement pot. Previously, the GEPF rules did not have those concepts, right? So it then means we need to amend our rules to introduce those concepts into our rules, define exactly what the savings pot is and how it's going to work going forward, define what the retirement pot is and how members can access benefits from the retirement pot.
Okay.
Yes.
Because the question that is asked generally is, why now? I mean, why has the bill been amended? Is it after the promulgation of the two-pot system from the 1st of September, or has it been before? Or is it an afterthought?
No, it's not an afterthought. Our rules were amended and they are effective from the 1st of September 2024.
Yeah.
Right. It's not an afterthought. We always knew that the two-pot system legislation is coming, and we're preparing for the rule changes and the implementation.
Okay. Right. Now, Mary, let me also bring you in. How has the two-pot system registration or withdrawal coming along?
Simply where the first phase of the withdrawals was from the savings pot, as Isaac has explained. About a month ago when we were here, we were sitting at about 186,000 claims that we have paid. As of this morning, we're sitting on 362,000 claims paid, and we should within this week exceed the 400,000 claim submissions from the savings pot withdrawal.
Right.
Also, the effect on the benefits that the GEPF pay out, meaning your retirement, your resignation, and your death benefits, we're also busy implementing and making sure that the new rules that were legislated applies to these benefits that we are paying. So we're at quite an advanced stage to make sure that all these pots are correct, to allow the members to withdraw their money, or when they retire to pay out the benefits, or when they resign, take either their fund out of the GEPF and move it to another retirement fund, or then if they cash in the money. Okay. So we're busy with those benefit payments.
So from the withdrawals that you've administered in the past couple of weeks, have the new rules affected those withdrawals?
Definitely impacted. As Isaac explained, as at 1 September you had your vested pot, where you have access to your full vested pot, and then the benefit changes is based on the savings pot and the retirement pot. Based on the exit rule, you will only have access to your retirement pot at retirement age, and we will keep that money for you until you retire, and you can then access that funds. Another concept that we did discuss in previous sessions as well was to allow for a member to move money between the different pots. So the options available, if you have insufficient monthly pension, for example, you are allowed to move your vested and your savings pot to your retirement pot to increase your monthly pension from the GPF that you will be paid at retirement. So it's a very, for me, the advantage to our members is the moving of these pots to the retirement pot. So I can still have access to a lump sum, but for me, as an example, as a member of the GPF, I would definitely take up the option to move to my retirement pot, increase my annuity, and make sure that I have sufficient income and sufficient monthly income when I'm at retirement age.
And so far, has there been any issues that are of concern to you?
The main issues that's concern is obviously information. People need to understand the impact of what they're doing when they're withdrawing from their savings pot, and that impact on the retirement pot and their benefits. Okay. So, as I mentioned previously, definitely the information on the GPF website must be studied to enlighten yourself or make sure that you fully understand if you do something, what's the impact, and especially when you reach a retirement age, what will be the impact on your benefits.
Right. Isaac, let me also bring you in. You know, when you talk of new rules, there is a cloud of panic, especially from the pension members, the pension fund members, because some were actually expressing concern that it might affect the 30,000, it might even be lower than the 30,000. So would it affect the limit of 30,000 rand?
So Simpiwe, the rule amendments are introducing the 30,000. Earlier on I spoke about new concepts. Another concept is seeding capital. In the rules, we're defining exactly what seeding capital is and how much it is. And it's 30,000. It's in our rules. It's not going to change. It's a concept that we are introducing now. We never had it previously. So members should not worry that with the discussion around the rule changes, it then means we are changing the 30,000 that is supposed to be seeded into the savings pot. Right. So the 30,000 remains. The only change that will be there is an increase. If you do a partial withdrawal, then there will be that decrease. But we're not necessarily taking away that 30,000.
But will members be negatively affected by these new rules?
Yes, but at a later stage. With this rule amendments, we are saying members are allowed to access their benefits before retirement. What that means is if they're making withdrawals now, at retirement would need to adjust their pensionable savings before we calculate the retirement benefit. What that means in simple terms is if you are making withdrawals from your savings pot, whether you are taking the 30,000 or any amount, at the end of the day, when you reach retirement, we need to adjust your pensionable savings to reduce it to account for the 30,000 you've withdrawn. In simple terms, I can say if you are taking the 30,000 now, you are actually taking your retirement income. You are eating your lump sum, the amount that you are supposed to be receiving at retirement age when you exit the fund.
I mean, is that how it's negatively affecting them? Because that's what they want to find out.
Yes, that's how it's affecting you.
Okay.
So we encourage our members to make withdrawals when they have emergencies, right? But if they don't have any emergencies, we are encouraging them to save what is sitting in the retirement savings pot up until they reach retirement age.
Yes. All right. Let's leave it there for now. Mugele, let's take a quick commercial break. We'll be right back. Sakumalo futhi mbukele. To take part in our discussion today, you can call our participation lines on 011-714-0671 noma ke ku 011-714-0672. Ungasithumela futhi ne-WhatsApp ku 060-844-9857. You can email your views, your thoughts, your questions to consumer@sabc.co.za, or alternatively, you can interact with us on our Facebook page. Now, gentlemen, I want us to discuss this shift that has been introduced by the new rules, the shift of 25% of the entire lump sum. What does that entail?
All right, thank you, Simpiwe. Earlier on, I spoke about allocation of contributions going forward from the 1st of September.
Yeah.
I mentioned that there will be a savings pot and also a retirement pot. Based on the two-pot legislation, a third of your contributions would be allocated to your savings pot. Two-thirds would be allocated to your retirement pot, right? When you then go on retirement, we're going to use your savings pot to pay your lump sum. And your two-thirds sitting in your retirement pot will then contribute towards your monthly pensions.
Okay.
Right? So with the GPF, we never had a structure whereby a lump sum that you're going to get as a retirement benefit as a third of your retirement savings.
Right.
According to our structure, your lump sum is only 25% of your retirement savings, meaning that the remaining 75% would then contribute towards your monthly pensions.
Which
right?
means the 25, sorry, just to cut you off, the 25%, does it mean that it can be equivalent to the 30,000 lump sum that I can withdraw?
No, those are two different concepts.
Okay.
Different concepts in a sense that the 30,000 that we mentioned earlier, just to remove confusion,
Yeah.
the 30,000 that we mentioned earlier is what is called seeding capital, right? So on the 1st of September, if you are contributing already to the GPF, we transferred either 10% of your entire retirement savings into the savings pot, or a maximum of 30,000. If you continue contributing to the GPF, let's say for an example, for another 10 years, what is sitting in your savings pot would have grown. Let's say, for example, it's 100,000, right? That would get as a lump sum, right? Now I want to talk to our previous benefit structure. In terms of our previous benefit structure, your lump sum was equivalent to 25% of your retirement savings.
Okay.
What you've accumulated over time from when you started contributing up until the date you exited the fund. Now, what I was explaining is, because we need to align with the two-pot legislation, we also need to change our rules and our benefit structure to say that if a member goes on retirement, the lump sum that we are going to pay, or a gratuity, would be equal to a third of their retirement savings.
Got you.
What they've accumulated over time,
yeah.
as members of the GPF. So the shift there is that now, because members are getting a larger lump sum than previously, it then means what is going to contribute to your retirement pot or your monthly pensions would be smaller than previously. It's moving from 75% to 67%. This means members are going to get a larger lump sum, but a lower monthly pension.
Okay.
Right? The tax implication, if you need to do a comparison between before the implementation of the two-pot legislation and after, is that because you are getting a bigger lump sum, it will attract more tax than previously. But if you are going on retirement, something that is very important for me to note is that 550,000 of your lump sum, the first 550,000 is tax-free, right? So this shift doesn't necessarily mean members have to pay more tax. But we are just saying we are aligning to the legislation.
Mary, let's delve deeper into the tax implications. With the introduction of the new rules, have the tax implications landscape shifted?
Not at all.
Okay.
The same tax is still applicable on the lump sum depending on the exit type. For example, as Isaac mentioned, if you retire, you have on your lump sum your first 550,000 tax-free in total for all lump sums paid out of different retirement funds, including the GPF, as well as resignation where you are taxed at the nominal rate or the marginal rate. So the tax itself didn't change. A key concept that Isaac touched on is the 1/3 and 2/3. Additional to that, you are allowed to move funds between pots to increase your monthly pension. So we must stress that. So for example, we looked at scenarios where I only leave 550,000 as my 1/3, it's tax-free, and I move all the remaining money in my vested and savings pot to my retirement pot to increase my pension. So I cannot overstress that flexibility that's available and the value add to our members in the legislation as part of that to make sure that you have something at retirement to live from. So previously, if I needed to access money urgently, I resigned and I took out all my money and I had to start afresh. Now I have pots where I can withdraw from without exiting the fund and ensuring that I have pension for my old age.
And how much of an increase then to my pension after, moving from one pot to the next? Can you talk percentages here?
Simply we can't talk percentages. It's based on the specific member. It's based on your service date prior to 1 September, your vested pot that was calculated as at the 1st of September. So if we take somebody that joined the fund on the 1st of September and only contribute under the new two-pot rules, you will basically, like Isaac explained, have your 1/3 lump sum and your 2/3 pension. That will be payable from your total value in the pension fund at the end of the day.
Okay. So, Mary, what have you observed in terms of the rush for withdrawals? Has that rush subsided now?
The rush for the savings pot withdrawals have not subsided yet.
Is it?
We haven't picked that up. So for the first tax year, the seeding amount is 30,000 that you have access to the maximum of 30,000. From the new tax year on 1 March 2025, you will have access to your full 1/3. And we foresee an increase, especially over the festive season, especially also, Isaac also picked up from their side on the GPF, that we will in all probability in January also have savings pot withdrawals to start to prepare for the school year, where school fees are payable, etc. So I don't think there will be a slowdown.
But have most withdrawals been the maximum of 30,000 or it varied?
Simply based on the value and the seeding capital, so it's 10% of your vested pot as at 1 September to the maximum of 30,000, and we have picked up based on the stats that people do withdraw maximum that's available in the savings pot.
Okay. So have all payment issues been resolved? Because the last time we were here, we were talking about some of the glitches that, pension members have been expressing concern about.
Simply, I can confirm the only known issues that we have currently is the legal proceedings, the divorce proceedings that prevent you from withdrawing your money. So the GPF and the GEPF first need to finalize these legal proceedings to understand the impact on your benefits and on your service. That will then be allowed to calculate your vested, your savings pot and your retirement pot, and then you can withdraw. Okay. If I can quantify it, we're sitting about, at this stage, out of the total 400,000 claims we received, with about 4,000 legal proceedings that still need to be finalized before the members can claim. Other than that, bank verifications resolved, tax directive issues resolved. We still have the inquiries function, or the inquiries channels where they can inquire on the benefits, as well as on the track my claim, as we call it, on the self-service application itself.
We'll talk about that in just a moment. But for now, please do stay with us. We'll continue this conversation in just a moment. Leli, Yilungelo Lakho. Welcome back. Kuba ingcenye enkulumo yethu namhla ke sishayela licingo khona la e-studio khona manje ku-011 714 0671 noma ke 011 714 0672. Ungasithumela futhi na WhatsApp ku-060 844 9857. Alternatively, you can email your thoughts to consumer@sabc.co.za, or you can even like our Facebook page or post your comments or your questions there. Namhla ke sikhuluma nge-two-pot system nemithetho lemisha ke that has been introduced by the amendment bill. Kuthi ke ingabe itakuthinza kanjani wena njengemthengi noma ke njengalilunga le-GEPF. We've got gentlemen here from the GEPF, and before the break, Mary, you were just talking about the Track My Withdrawal system. How does that work?
Simply when you access your savings pot withdrawal, on the self-service app, there's an option to track my claim, where we indicate precisely where we are in the process. Previously, we did engage on the process itself. You submit your claim, we do the bank verification. If it's successful, we do the tax directive. If that's successful, we pay you out. So on the application itself, you can see where you are in the process and if you are paid the amount that's paid. Additional to track my claim, the savings pot withdrawal is one component of the big rule changes Isaac has explained to us, where you access your savings pot. When you exit the fund, there's different modes of exiting the fund. So either you resign, you retire at retirement age, or after certain ages, 55, 50, etc. Or then, if you pass away, you will exit the fund. Now, the impact of the two-pot on those benefits payable is based on what Isaac explained. If you access your savings pot, you will reduce your benefits. If you do not access your savings pot, you will still have access to your full retirement value as at the exit date. The exit type itself also have a huge impact. For example, if I can use the example on myself, I withdraw my 30,000 in the month of September. Based on my value in the fund, my service will be reduced with that 30,000. It depends on each individual how much it will reduce. Let's say it reduces with 1 month or 2 months. And if I resign at the end of October, there's different modes of resignation. I can take my full value from my fund and I can transfer it to an approved pension fund. The tax implication there, if I transfer to an approved pension fund, there's zero tax. Because it will be taxed in the next fund when I withdraw from that fund. If I cash in my money, I can access my vested and my savings pot and I can get that money, and it's taxed at marginal rate. So it's a much higher rate than retirement. And my retirement pot will stay until the age of 60 in the retirement pot for when I retire and reach that age. So the exit type has a big impact, and that's where the rule changes, the majority of the rule changes were all about. And not about the small little savings pot withdrawal.
Yes. All right. Let's now take our first caller. Sina Vivian ula eJozi sakumodo ehleleni sawubona.
Hello.
Kunjani mama?
Kibona guys.
Siyaphila, khuluma nathi mama. What's on your mind?
Kimani ukuthi yakuzwa.
Yes. Siyakuva mama. Khuluma nathi mama.
So, your phone is not clear.
Yeah, well, we can hear you. Please talk to us. What's on your mind?
I can't hear you clearly, sir.
All right, I think we seem to have a technical issue connecting to Vivian. We'll try to re-establish connection with her from a much more clearer line. But while we're doing that, Isaac, I want us to talk about whether members are allowed, say for instance, a member is resigning from the government service and he wants to withdraw the entire pension. Is he allowed to do that?
Not really, Simpiwe. From the 1st of September, we've been allocating contributions to two pots. First pot being the savings pot, the second pot being the retirement pot. So if you resign after the 1st of September, it then means you are only going to be able to access your vested pot if you're contributing before the 1st of September, plus your savings pot. The retirement pot would wait for you up until you reach retirement age. So it will be left with the GEPF up until that point.
So what kind of, or what type of retirement then can I withdraw entirely? Like, can I withdraw from one pot and leave the other pots?
No. So it's either you take it as cash, meaning that you are going to take your savings pot and vested pot as cash, leaving the retirement pot, or you can elect to transfer your entire retirement savings to your next pension fund. In that case, it then means you are going to be able to transfer your vested pot, retirement pot, and also your savings pot.
Okay.
Like Marion has said, if you are electing to do that transfer, there won't be any tax. However, if you elect to take your benefits as cash, there would be tax that you need to pay.
Okay. Okay. Do I know any way in on that, Mary?
Definitely. Marginal rate tax, you would pay minimum 25% on that cash withdrawal from the fund, if you withdraw your money from the fund. So there may be reasons for that, but that's where the new two-pot benefit is added, where I will have money in my retirement pot.
Yeah.
Not so much at the beginning now, but over the period of years, if you're a new member, for example, you will have a big retirement pot or a bigger retirement pot at the age 60. As you mentioned the example, Marion is working for government, I resign from government and I go and work in the private sector. Two options, just to confirm, I can transfer my whole value to an approved pension fund, or I can cash in my lump sums available vested and savings pot, whilst my retirement pot stays up until the age of 60. Now, for example, I go and work in the private sector, I belong to another pension fund or a provident fund, etc. So the same rules will apply. And my benefits will accumulate up until the age of 60, where I will then have access to my retirement pot.
So for those who would want to maximize on their pension payout, they resign from the government service and start working for the private sector, and then they join a different pension fund, but can they continue contributing to the government fund, even though they're no longer employees?
No.
So the only option is to transfer their funds to whatever chosen provident fund, right?
Yes, that's correct, Simpiwe. If you leave the employment of government and some of the associated institutions, you can no longer contribute to the GEPF. If you are in the private sector, yes, you were a member of the GEPF before moving from government to the private sector. Yeah. You cannot continue contributing.
Okay.
So it's advisable for you to transfer your benefits accumulated in the GEPF to your new retirement fund.
Right, right. All right, let's take our next caller. Sina George, ula Soweto. Sagomole hleleni sawubona. George in Soweto, welcome. Thank you so much for calling.
Yes, two questions there. We are being confused by the three pots.
Say that again, sir.
Yes, we are confused by the three pots. I'm 58, I'm about to retire, and I did not take the 30,000, but I want to take a larger amount next year, January.
Okay. All right, George, thank you so much for your question. Our guests will definitely answer you. Gentlemen?
Thank you for that question. To respond to that, I guess I need to explain as to why the three pots. GEPF has over 1.2 million members who were contributing to the GEPF before the 1st of September.
Yes.
What we then did is we said all the accumulated benefits, all the pension that they've accumulated will then be put in what we call the vested pot, right? If I need to explain the vested pot in simple terms, we are saying you're contributing to the GEPF, and the rules were saying if you resign, you are able to take whatever you've accumulated as a lump sum, right? As a resignation benefit.
Yes.
We are saying that benefit that we've accumulated up until the 31st of August will still be there, and all GEPF rules would apply.
Okay.
Right? Going forward from the 1st of September, your contributions will then be allocated to the savings pot and the retirement pot. So now, because you are contributing to the GEPF before the 1st of September, you have three pots. Anybody who starts contributing to the GEPF or any other retirement fund from the 1st of September, they would only have two pots. He's saying he's going to exit next year, what that means is we are going to pay a lump sum and also monthly pension from the vested pot, right? And from the savings pot, would pay it out as a lump sum, right? What is sitting in the third pot, being the retirement pot?
Okay, yeah, please hold your thought. We need to take this break, but we'll continue that conversation in just a moment. Let's take another commercial break. Sakomola futhi mbukeli khumbula ukuthi icingo tethu la e-studio solo tivuliwe ukuthi nawe ungaba ingcenye yenkulumo yethu namhla ungashada icingo khona manje la ku-011 7140671 noma ke 011 7140672 ungasithumela futhi na WhatsApp ku-060 8449857. You can also email your thoughts to consumer@sabc.co.za or alternatively interact with us on our Facebook page. Now, Isaac, you're just clearing the confusion about the two-pot or the three-pot system.
Yes, thank you. I was on the third pot being the retirement pot.
Yeah.
The caller said he wants to exit next year. I assume it will be early retirement. And he has been contributing to the GEPF in the past. So he would be able to access the retirement pot. From the retirement pot, we are going to pay monthly pension. So as a member who has contributed to the GEPF before the 1st of September, and who's at retirement age, he will then be able to access all the three pots: the vested pot, savings pot, and retirement pot. But different benefits are going to be paid from these three different pots. From the vested pot, we're going to pay a lump sum, also monthly pension.
Yes.
From the savings pot, we're going to pay it as a lump sum. The retirement pot, we're going to pay it as monthly pension.
Yes.
So there must not be any confusion, especially to those who are going on retirement because they are going to be able to access all the three pots.
All the three pots, yeah.
Yes.
But then is the same tax implications applying on the three pots?
Yes.
Okay.
Because he's going on retirement, he's going to be taxed using the retirement tax table. Unlike if you are making an application to withdraw the 30,000. If you are making an application to withdraw the 30,000 without exiting the fund, it then means you are going to be taxed at a marginal rate. In simple terms, what a marginal rate is the tax rate that is being used to calculate your PAYE. Meaning that if you are being taxed at 38%, it then means your two-pot withdrawals are going to attract tax at 38%.
Okay, all right. Thank you so much for making that clarification. We've re-established connection with Vivian, and she joins us now. Vivian, sawubona. Khuluma nathi ma.
Yes. Ke tlile ko marshal office ka di 23 of September to fill up the form for a two-pot. So I was supposed to log in from Thursday because when I was there, it was on Monday. I've been struggling to log in from my phone since that time until now. So I don't know what to do now.
So you've been struggling to log in and start the withdrawal process from your phone or online?
Yes, I was trying to do it online. But using my phone, I've been struggling a lot, sir. I don't know what to do next.
Okay, so for our officials of GEPF, for them to understand your query, what sort of error message are you getting?
No, it's saying, I can't remember well now, but it's repeating one thing, that I must go back and, I don't know, submit something, and there are so many things that appear there.
Okay, ma'am. All right, ma'am Vivian, thank you so much for joining us. The officials of GEPF have been listening, and they will try to help you. Mary, how would you help her in that regard?
Simpiwe, the first thing that I will do, I will make sure that she can log on to the system. So we use the combination of the cell phone number as well as the email address.
So you can do it from your side?
We can definitely do it from our side. What I will definitely propose to assist Vivian, we will engage with her, make sure the cell number and the email combination is correct to allow her to log on, and then we will see if she can get access to a savings pot based on the different scenarios, the amount available in a savings pot, and I assume she wants to claim a savings pot withdrawal based on the error. So we have a cell number. We will definitely, with the colleagues at the back office, also engage with her, sort it out for her and allow her to claim.
All right, Vivian, thank you so much for your call. We certainly hope that you will be assisted in that regard. So how common are these problems, though, of members struggling to log in?
So, with the same feedback we gave previously, the two biggest issues that we're currently experiencing is still the old phones with the operating systems that are not upgraded, as well as the old version of the application itself. And then very importantly, when Vivian phoned the first time, I could pick up that she's got reception issues.
Yes.
So if you don't have a good signal as well, you can also battle with the application itself and log in. And that's why we allowed for the web version as well, where you have access to both the app version as well as the web version. But we will assist Vivian on both of them to understand. And if she's got access at her employer to internet as well, it will also assist, because the connectivity or the connection to the application will be better.
Okay. So in the application for withdrawal, what is it that members need to submit? Do they have to submit their bank details, their ID, or you have those in the system, right?
Correct. So where we have all of that information, that's one of our key safe areas where we do not allow for update of bank details. We source the information from your employer, where you receive your money on a monthly basis, your salary, and then the tax directive, the tax number you can supply to us to give us the tax number, and we will then verify that with SARS via the tax directive itself.
So for those members who are watching this show for the first time, what do they need to submit?
If we have access to the valid bank account from the employer, where you receive your monthly pension, your monthly salary, as well as your tax number, we will display it. You can confirm it and just say, this is the amount of the 30,000 or the 10% maximum what you want to withdraw. So it's very easy to withdraw. The information is also available on the GEPF website, a quick one-pager guide with steps how to access the app, and if you access the app, how to claim your savings pot.
Okay. Now, Isaac, if a member realizes that, no, man, they shouldn't have withdrawn, can they take the money back?
They can't. How Mering and the team have designed the system is that once you submit a withdrawal application, you cannot cancel it. The minute you say submit, it will start the process of getting your banking details and your tax directive processed. And once that is done, based on how the system is designed, you cannot cancel it.
Okay. All right. I may not cancel it, but say I take the process right up until the end, and then I get the cash, and then I use it for whatever, and I get some windfall anywhere or elsewhere. So do I have to pay the fund back because I don't need the money anymore, but just to maximize on my pension later on?
You can't, but we have what we call a purchase of savers. So as a member of the GP...
What's that again? Purchase of?
Purchase of savers.
Purchase of savers, okay.
Yes. So you can buy a year that you never contributed to the GPF. Let's say, for example, I started contributing to the GPF in the year 2020, right? And I was coming from a different employer outside public service. Yes. I'm able to take cash and come to the GPF and say, is it possible for me to buy 1 year or 2 years using the cash that I have? So now, with the implementation of the two-pot system, I said that if you are making withdrawals from your savings pot, your pensionable savings would need to be adjusted. So if you have cash and you need to buy back the savings that you've lost, you can go to your HR department, ask them to get a quotation from the GPF so you can buy the period that you've lost.
Okay.
It's a very simple process. It's either you pay it as a cash lump sum, or you can pay for the purchase of savings over a longer period in installments.
So that will attract no penalties, eh?
No, there will be no penalties.
Okay. So it's a very good vehicle to put back what you've taken out.
Yes.
And you can put in more than you've taken out. So there's no limit on the number of years or period that you can purchase.
Because it's savings after all.
It's savings after all. Also, when you procure service, it's seen as a pension deduction and it will be tax deductible. So it's similar to a transfer into a fund as well.
Okay.
So it's to your advantage, increasing your retirement pot.
All right, got you. Mbukeli, sasel kefu leflek gcina hlala kanye nathi kungasanyakati. Stop inze sibuye emva kweli kefu. Welcome to our final segment. Unfortunately, our lines are closed, but you can still continue watching in this very last segment. Let's talk about, some of the issues that members have been grappling with in terms of, okay, we've touched on the technicalities, the technical difficulties, and as well as the tax directives. So what else do consumers and members of the GEPF need to know?
So, from my side on the savings pot withdrawal, we did touch on the legal proceedings, the finalization before you will be allowed to withdraw from your savings pot, and also obviously your bank particulars. If your bank particulars are not correct, you will have to submit the new information to your employer to allow us to have access to that, to ensure that we don't pay to a fraudulent bank account or a bank account other than your own bank account.
Okay.
On the withdrawals itself, or the benefit withdrawals post 1 September, we are attending to those within the SLA, the 60 days SLA or the service level agreement that we have with the GPF for the payment of members, and we will comply with that. Inquiries, all inquiries on savings pot, withdrawals, etc. The question from George on, I'm going to be 58 next year and I will retire early, all those can be still channeled through the normal channels. We have updated all the channels with the latest information. So the whole two-pot brought a whole new way of doing things, and we are already attending to that in the benefit payments prior to 1 September as well as after 1 September.
So the different retirement ages will not affect the entire process because some retire at 60, some retire at 63.
100% correct. You can retire anything from 50 years for certain educators, as we call it, or education members. Then from 55 onwards, any member can retire. Between the age of 55 and 60, there is a penalization on early retirement, as we call it, but you can retire then up to the age of 65, if you're over the age of 60. And still the money will be allocated to your retirement pots and the different pots, similar to what under 60 or above 60.
And even for those who retired under medical grounds, for instance?
We have the ill health retirement as well, where people that can no longer work are then retired due to, or we call it a discharge due to ill health. The normal rules will still apply, as Isaac explained, the lump sums from your vested and your savings pot, your monthly pension from your vested and your retirement pot.
Okay. Now, Isaac, in closing, what is it that most members have been doing wrong, or some of the mistakes they've been committing that they should avoid?
I'm going to talk about the time before the implementation of the two-pot system. The mistakes our members were making were that when they have emergencies that they need to pay for, they would exit the fund, take the retirement savings as a lump sum, and then come back at a much later date. So with the introduction of the two-pot system, we are also introducing compulsory preservation in terms of the retirement pot. So members are going to be able to access...
compulsory preservation?
What compulsory preservation means is that a portion of your retirement savings would wait until you reach retirement age.
Okay.
And previously, we didn't have that concept. So members had a choice whether they want to preserve their benefits or not. So if they choose to not to preserve their benefits, they would take it as a lump sum. We also had instances whereby people who are moving from one department to the other were taking their retirement savings as a resignation benefit. So from the 1st of September, they can no longer take everything as a lump sum. They will be able to take their vested and also their savings pots, but the retirement pot would wait for retirement age. But all this information that we spoke about earlier on is on our GEPF website. Members can go there, understand the processes and what the two-pot system means going forward. Yes. And rule changes are also on our website, so they are able to access the rule changes that we are talking about today.
Remind us about those details, the website and the contact details.
Our website is www.gepf.co.za. They can visit our regional offices. We have regional offices across the country. They'll be able to get an explanation from our colleagues there.
All right.
We are also going to put information on the GEPA website with regards to our processes and how they can access the portal to make withdrawals.
All right, gentlemen, great chatting to you. Thank you so much for this thought-provoking discussion. We do appreciate your time. Thanks.
Thank you very much for the invitation.
Ivakashi state ngesikhathi sabo ngithandabuka kanye nani babungele ngekuba nathi kuze kube manje asihlane futhi ke ngesikhathi lesitako la kumahamba phambili SABC 1 eMzansi for sure na ku SABC Plus lapho ke sibe silethela ke lenye indzaba letawuthinza wena namalungelo akho njengemthengi from Izindaba Ngcongwane and the rest of the team sithi ke nisale kahle and to have a great week ahead. Cheers. Yilungelo Lakho.